Okay, guys, please confirm if you can hear my mic and you can see my screen.
Dumela.
Oh, Nico.
Dumela.
Are you able to see my screen?
Yeah, it's appearing.
Okay, guys, I welcome you all, everyone who joined today, guys. I know it's a Tuesday, it's a whole day, but yeah, on market, there's no holiday, guys. We're still trading. And I want to welcome everyone who joined. And also we have a Tulani from Pips Lab Trading Community. Welcome, my guy, welcome. So guys, what I want us to focus on, because we only have 45 minutes, guys. I want us to focus on the reversal pattern, which is the double top and double bottom, inverse head and shoulder, and head and shoulder. So let's assume that we're in an uptrend. This is our uptrend, like market is pushing up. So when market push up, for us to consider our reversal pattern, it must be at support or resistance. This is our support and this is our resistance. When markets get at this key area, that's when we're gonna look for a reversal pattern, which is a double top or a double bottom. But then for the entries and confirmation, when we see a double top or a double bottom, we do not just enter, because market can get here and make a first leg and second leg. And when you enter here, we're expecting price to go up, but it comes here and continue going up. So when it gets here, it forms what is called a bullish pattern. So now it forms a continuation pattern. It's no longer a reversal pattern. Can I just admit these people? So when market is pushing down, guys, this is market pushing down, we form resistance and we go into a support. So when markets get here, we're expecting a double bottom. So we have our first leg here, then market push up and it push down. This is our second leg. So this is a reversal pattern. So once we get this, is a second confirmation, because first confirmation is that we at support, and at support we're expecting price to push up. So when it gets here, it shows that there's no more of buying selling pressure from the sellers, because now instead of price making a lower low, it made the same low. That's why we have a double bottom. It made same low. It didn't break here to make another low. So here it made the same low. So from here we're expecting it to reverse up to our support. So this is two reversal pattern that we're focusing on. And another reversal pattern is the head and shoulder. So let's assume we have a resistance here. This is our resistance. And price is pushing up. So when it gets here, price start to react, it reverses a little bit and it breaks this support here. So someone might say, okay, it's gonna be a breakout and retest, and it will continue going up. But instead of making a breakout and retest, what price do? It goes back in. It goes back in, forming our head and come in and form our head. So now we had what? We had a a head and shoulder pattern. We have a head and shoulder pattern. So this is another reversal pattern that we focus on when breast is pushing up. When breast is pushing up, we have a head and shoulder pattern as a reversal. Just a second, I'm admitting people here. Oh, why is my vanishing? So guys, this is our head and shoulder pattern. So I don't know what happened with my pen. It's now vanishing, guys. So let's assume we're in a downtrend. Market is pushing to our support. So when we get that support, we expect market to react, break out, and we don't just say, okay, market did break our support, so we're gonna continue. So what we expect market to come back. To come back to our buying goal. So guys, let's go on the chart and look on the chart. Let's go on the chart so we can try to spot this pattern on the chart. So when we focus on the chart, we're gonna also look where do we take entries with this pattern. Guys, please mute yourself. So you will send a message if you want to talk, guys. Please mute yourself. Okay, I want to open our chat. Okay, guys, my screen is a little bit slow, guys. I want to open our trading view, but my network is a little bit slow. Okay, here we go, guys. Can I stop sharing for a second? Can you please mute your mic, guys? Can you please mute your mic?
So beautiful. I love the black route with some countertops and fixtures on the cabinets. This is a gorgeous master bedroom. Definitely a shower. Love how they put the tiling in the kitchen there for food and also carried into the kitchen so all matches. They did that accent wall, that darker gray. Really pretty. Yeah, nice and hot. Yeah. So really nice.
Yeah, guys, whose mic is not muted?
The doors outdoors, looks like a slate.
We can go fast.
No, it's a little high for that.
I'm having a little bit of network problems, guys. It doesn't want to load. Okay. Okay, so guys, about network.
Are you back?
Yeah, I'm back. I'm back now.
Okay, cool.
Okay, guys, let's look on the chart. So we had those 4 reversal patterns. So now we're gonna focus on Nasdaq and see if you are able to spot those patterns. Okay, guys, let's see. Like as we can see, Nasdaq is been on the uptrend. So now we had a resistance here. So I said if Nasdaq, if we have a reversal pattern, what will market do? It will push up, give us a first leg, come back down, give us our second leg. So now we can see we have a double top. So now we're expecting Nasdaq to push up at least to this level to respect this double top. So this is the double top that I did show you guys previously. So, but now we don't just take an entry. What we need to do, we need to see what's happening here. We need to see what's happening here. So what do we expect? We need to look at the what we're gonna say is the entry. So it's either we're gonna enter at the break of the neckline, or we're gonna enter at the candlestick pattern formation, or we enter at the channel formation. If you can see, when Nasdaq was approaching the second leg, when we had the approach of this second leg, we had it was not impulsive as the first one. If you can check this one here, this was a confirmation that there's no buying pressure for Nasdaq. If you can check, if I would make a channel here, so you can see this was an impulse. From here, it was an impulse, and this was a correction, giving us another confirmation that, okay, we're gonna break to the downside. But now we still here, what we can say is a neckline. So if it breaks here, already you can see it's breaking. We can take an entry. Why do we take entry here? We don't take an aggressive entry here, because here price already made a lower low. So this is a confirmation because it violated this previous low and make a lower low. So we can take our entry from here, targeting this part down. But now someone say, okay, I don't want to miss this move here. I want to get at this move here. So now we know, okay, we at resistance. What we need candlestick formation, which it will be our, what we're gonna do is we're gonna move to a lower time frame to look for candlestick formation. If you wanna enter at this part here, you say, okay, I don't wanna wait for a break of this neckline. I wanna enter when market is here. So that's where you're gonna go into a lower time frame to look what candlestick is doing in a smaller time frame. So let's put here, if you can check on 1 hour. If you can check on 1 hour, price was moving in a correction from here. And I think yesterday, yesterday TM sent a signal to buy NASDAQ around here. And this morning he sent a sell. So if you can check, this is another pattern that we say, okay, we have a uptrend channel. So if you can see where the impulse, and this was a correction. I always say after correction, what do we expect? We expect a continuation and we target 90% rule. I always tell you this, after impulse, it will be a correction, and after correction, we expect a continuation and we target 90%. So this is was another confirmation, okay, that NASDAQ is gonna sell because of this, how it approached this support, this resistance here. So even if you can check, even here, NASDAQ was not impulsive. It was not another confirmation that, okay, there's no buying pressure. The momentum for buying is no longer there for NASDAQ. So this is as another confirmation that, okay, we have this correction here. So if you can see, this was an impulse. This was an impulse, but this uptrending channel, it was at our resistance. So the breakout to the downside, that was gonna be our entry. That was gonna be our entry. Remember on last week, when we were talking about support and resistance, we say this pattern, I prefer them only as support or as resistance. If they happen in the middle of nowhere, I don't usually consider them. You still with me, guys? Or I'm moving too fast? Are you still with me?
They're all muted.
Okay.
Sure.
So let's say here we have our support. This is considered as support. So what do we see here? What do we see here, guys? We have a double bottom. We can see with a first leg here. This was our first leg. With the first leg here. And this is our second leg. And what I want you to check, I want you to check how NASDAQ it was approaching this. How it was approaching this support. So you see it's giving us clue. It's giving us clue before it breaks anything. So we can see where this impulse and where a correction towards our support, it breaks and come back and a retest. So this one here, this is what I call a high probability trade. Let me tell you what, if we have a resistance and support, and we have a falling channel towards our support, and inside that channel, the second leg is outside, then this one, I consider it as a high probability trade, rather than the double top or double bottom that we have, that is inside our channel. So if it's like this one, I consider it as a higher probability trade because already it's confirmed that it broke out of the downtrend channel. it come and retest of this downtrend channel. So this was a low, this was a higher high, this was a higher low. So you can see that this is already market structure that we need to move up. We need to go high. Let me unmute everyone. Okay, guys, remember on the strategy that I show you that how we trade NASDAQ. Let me remove all the drawings. So let's see, NASDAQ, we can see it's been in a downtrend from here. We're in a downtrend. We're in a downtrend. This was our downtrend. This is a downtrend channel. So we can see now where the breakout, but this is on a daily. So before NASDAQ went in a downtrend, NASDAQ was pushing high. We can see from here where this double bottom here. Where this double bottom and NASDAQ did push up. So from here it failed to make higher high. From here it failed to break this resistance and turn it into support and continue making higher high. So from here it gave us what I can call a triple bottom at resistance. So when it breaks this level here as our neckline, so that's when we're gonna make a entry going down, and we're gonna target this level. Let me check the comments. Okay, guys. Droba said you must log profit on German 30. Those one are still holding German 37. So let's go and focus most on a current market before NASDAQ started going up. If you can see, guys, here we're the inverted shoulder. This was the left shoulder. This was the head, and this was the right shoulder. So this was another confirmation that, okay, now we're gonna go up. And when NASDAQ came back to this level here, when it came back to this level, it gave us what? A double bottom going up. It came back, gave us another double bottom. This is the first leg. This is the second leg. So why, guys, if NASDAQ is continue doing the same thing, do we lose money? Is because we don't wait for this pattern to play out. We always want to see ourselves inside a trade. Again, we had a invest head and shoulder here. I remember when market was still here, this was the left shoulder. We did take some trade here, but on this one, it didn't play to this level. But this was another reversal pattern. So NASDAQ won't just move up without coming back to give us a entry. So this one is on current market, but let's see if maybe we can go way back and see. Same thing here. Same thing here. With this level from this side, this was our support. Remember when we started, I showed you that for inverse head and shoulder, it will be like this. It will come to our support, touch, and the second head, our head, it will break our support and it will go back inside. So we can see here we had that inverse head and shoulder, and it was with a double bottom. So that's why Nasdaq started shooting up. And here we had a falling channel, and it broke out of falling channel, giving us a head. So this was the left shoulder, this was the head, and it came back. This was the right shoulder. This was the right shoulder. And market went down. So guys, we left with only 9 minutes. So I want anyone to ask question. Okay, how can I deal with the NAS spike? So guys, when it comes with NAS spike, guys, there's no way we can deal with it, but we can avoid it if maybe we use pending orders, because we can see Nasdaq is giving spike all the time, what we call our stop loss hand. So if you know where you place your stop loss, if I'm gonna make an entry here, if I'm making my entry here, because I'm little bit aggressive, I'm gonna put my stop loss below the head. I'm gonna put my stop loss below here, below this head here, because I know Nasdaq, it might come with a spike. So my stop loss would be, because I know the minute it breaks here, it will invalidate my trade, because we can see this is the lowest low. So if it breaks this lowest low and make a new lower low, then I know it's a trend change. And we can see where this supporting trend line, if it breaks this supporting trend line, I know my trade is being violated. So it's a trend change. So when you put your stop loss too tight, obviously it's gonna stop it, because we can see Nasdaq is having a lot of spike. There's a lot of spike with Nasdaq, but it's a matter of where you put your stop loss. Can you all unmute yourself, guys? So you can ask questions. Anyone who have a question or anyone who wanna add something? So you guys sorted.
Now I have a question.
Okay, you can ask.
So now after the confirmation and stuff, right, in the breakout, how are we gonna know that how long is how can I say? For example, you were explaining now earlier on of the head and shoulder.
Yeah.
Isn't it?
Yeah.
So now let's say, for example, they're in the model now. It's the breakout and then it starts dropping. You know where we must, like, our entry point must be at. How do we know how long to hold the entry point?
Okay, with a head and shoulder, we use what we call pattern projection. So with pattern projection, this what happens. Where is our head and shoulder? So we're gonna put our neckline. Let's say we have a neckline here. This is the neckline. So what we do with pattern projection, you put your trend line from the head. You put your trend line from the head to the neckline, and at the break of the neckline, this will be your take profit. Your take profit will be here. This is pattern projection with head and shoulder, inverse head and shoulder. You do a pattern projection. Sure.
So can I ask, like, for example, if your neckline is broken, how do you confirm that that neckline is a valid one? Because, for example, on the example you just showed us, there is no retest or any confirmation. So meaning that if one candle break that resistance of the neckline, so what's going to happen from there? You just wait for market to break your resistance or your neckline, then you just enter or you wait for some other confirmations?
So it depends. It depends on your entry. It's either you're gonna enter at the break of the neckline if it's making, because if you can check here, let's look on this neckline here. You see, this was a high, and it broke this one and make a higher that is higher than the previous high. You can enter if you don't wait for a pullback, because sometimes pullback don't come, pullback becomes late, or sometimes the pullback becomes reversal. So you can either wait for a neckline break and you enter at momentum if only is violating the previous high or the previous low. If you don't wait for a pullback. Is it clear, that one? You can enter at the momentum of a breakout without waiting for a pullback. But if you enter the momentum of a breakout, make sure it's violating the previous low or the previous high. So it's another confirmation, because we know market structure is a higher high and higher low. So if it violates the previous low, so now is another confirmation that it's gonna continue going up. Okay. So another thing, if you on the strategy that I posted on YouTube, I say if we're gonna enter or look for our exit, we target the beginning of the bearish market. If this was the beginning of the bearish market, if you entered maybe here or you entered at the break of a neckline, you target the beginning of a bearish market from here. This is what's going to be your take profit. Even sometimes it will take days to get there or it doesn't go. But for me, I always target the beginning of a bearish market or beginning of a bullish market, because I know market is need to come to fill up this gap. Another question, guys. With that 3 minutes that is left, any question? Are you guys sorted?
They muted themselves. It's like they are talking.
No, we're not
their mic is-
sorted. We're not sorted. I'm just like a baby, you know. I'm looking and I'm learning. I'm writing the words down because I know what I need to go and learn the terms.
Yeah.
I haven't understand how this is going. Because like in Namhlanje, what I got from what you teach is when you say like the market is going up.
Yeah.
And then it is a pansy, and then head and shoulders. So my question was, Uguti, how do you know Uguti, okay, manje head and shoulders then izoyibreaka futhi iye phezulu, ikhoswa yini ukuthi ibreake iye phezulu?
So what's gonna cause it is because let's assume we have a resistance here, né? So
Yes.
support and resistance traders, they will be looking at this level here.
Okay.
Support and resistance traders, they're gonna be looking at this resistance and say, okay, if it comes at this support, I'm gonna buy. So we have support and resistance traders looking at this pattern. We have a pattern traders looking at this area here. We have pattern traders looking at this area here. And we also have candlestick traders looking at this area here. So you can see like when it gets here, it's gonna be a lot of buying pressure because of those people who are eyeing at this area here. That's when it's gonna break, because there's a lot of people looking at this. And after we have those who say, okay, I'm waiting for a breakout and retest, that's when I'm gonna make my entry. So that's when it gets here, it gets enough momentum to push up because of people who are eyeing at this area. Let's say also we have a trend line traders here. So when you touch the trend line, they buy. When you give a touch at the trend line, they buy. When you give another touch at the trend line, they start buying. So you can see this is become a confluence zone because a lot of people, they are looking at this pattern here. So a lot of people, they are eyeing here. That's why it gets enough strength to continue going up. So that's why when it gets here, people, they started taking out their money and started closing their position. It went back again to give us a double bottom. So when we see this double bottom, this, okay, we know this pattern. When we see a double bottom,